A calm investor. How Stoicism unlocks steady profits and peace of mind, written by Ronnie Rowland. Published by Growth Literacy Lounge. The market doesn't care about your feelings. It doesn't care that you're nervous, hopeful, or exhausted. It doesn't slow down when you need time to think. It doesn't explain itself. It just moves fast, chaotic, sometimes beautiful, sometimes cruel. And you? You're left to respond. That's where most investors lose the game, not in their analysis, but in their reaction. They get swept into a storm of fear, greed, headlines, and hype. They abandon discipline for emotion. They make smart decisions at the wrong time, or dumb decisions with misplaced confidence. Not because they lack intelligence, but because they never trained their temperament. Jim Rohn once said, "Discipline is the bridge between goals and accomplishment." In investing, that bridge is emotional, and for most it's missing. This book is about building that bridge. It's not about predicting the next crash or finding the perfect stock. It's about mastering something far more powerful, your mindset. It's about learning to remain still when the market thrashes, and to stay principled when others get loud, to replace impulse with clarity, to stop chasing and start choosing. The calm investor is not a fantasy. It's an identity you can adopt, rooted in the ancient wisdom of Stoicism and proven through decades of behavioral finance. It's not about being passive or indifferent. It's about being intentional, steady, and unshakable in a world that wants you reactive and reckless. Each chapter of this book will give you a mindset shift, a story to anchor it, and a practical tool to apply it. You'll learn how to build not just a stronger portfolio, but a stronger self, because long-term investing isn't a strategy, it's a temperament. And that temperament can be trained. So if you're tired of feeling anxious, scattered, or emotionally hijacked by your investments, if you want to stop checking your portfolio 10 times a day, if you're ready to build real wealth without losing your peace, turn the page. Let's begin the journey toward becoming a calm investor. Chapter 1. Your reaction is your edge. The market opened with a thud. Red tickers bled across the screen. Headlines shouted panic, worst opening since 2008. In living rooms and offices around the world, hands hovered over sell buttons. Fear surged like electricity. One investor hit confirm, he'd had enough. Another sat back, sipped his coffee, and did nothing. They saw the same data. But only one had trained for this moment. When chaos hits, most people scramble for control. They check their portfolios obsessively, chase breaking news, and beg for certainty in a place that offers none. They don't realize the real battlefield isn't out there, it's internal. Fear, greed, urgency, regret. These emotions cost more than any crash. The calm investor sees the storm, but doesn't become the storm. This isn't detachment, it's discipline, and it's learnable. Epictetus, the Stoic philosopher, once said, "It's not what happens to you, but how you react to it that matters." That's not just good advice, it's a mental model for investing. Because while you can't control interest rates, inflation, earnings reports, or market sentiment, you can control your behavior. And over time, your behavior shapes your returns far more than any single event ever could. Think about it, the same market crash that makes one investor panic gives another a buying opportunity. The difference? Not intelligence, not timing, just response. Reaction is edge. But here's the hard truth, your default reaction won't help you. Our brains are wired for survival, not long-term wealth creation. We feel pain from losses twice as strongly as pleasure from gains. We seek action to soothe the discomfort, even when inaction would be wiser. The modern investor faces 1,000 psychological landmines, and most don't even know they're stepping on them. Stoicism gives us a way out. Before every market move, the calm investor asks, "Is this within my control?" If the answer is no, if it's tied to future headlines, Fed policy, or the opinions of strangers, they let it go. If the answer is yes, strategy, process, behavior, they focus there with clarity and intention. And when emotion floods the system, they pause, not forever. Just long enough to breathe, to step back. To ask if the action they're about to take aligns with their principles or their panic. This isn't easy. But it's transformative. Because over time, that pause becomes power. It creates space between stimulus and response. It turns reactive investors into reflective ones. It breaks the cycle of regret-driven decisions and replaces it with confidence, not in the market, but in themselves. The calm investor isn't fearless. They just refuse to let fear drive the car. In a world of noise, they protect their signal. In a culture of speed, they honor patience. In a system built on movement, they find strength in stillness. And the results? No, not overnight riches or viral trades, something better, steady progress. Fewer mistakes, more consistency. Peace of mind. A life not dictated by the next financial headline, but guided by inner clarity. So the next time markets dip, ask yourself, what matters more, what's happening out there, or what's happening in here? Your reaction is your edge. Sharpen it. You can't control the market, but you can control your behavior. Emotional reactions are often more damaging than market events. Mastering your response is the foundation of calm investing. When was the last time you acted emotionally in investing, and what did it cost you? Next time you feel panic or FOMO in the market, take one deep breath, write down your impulse, and wait 24 hours before acting. Chapter 2. The Calm Investor's Code. He never seemed rushed, never hyped, never shaken. The market went up, he didn't gloat. The market went down, he didn't panic. When friends bragged about meme stocks or flipped crypto for quick cash, he nodded politely but didn't follow. Years passed. The noise faded. His portfolio grew, quietly, steadily, without drama. People started asking, "What's your secret?" It wasn't a secret. It was a code. Most investors don't have one. They invest like tourists without a map, drifting from trend to trend, acting on impulse, and hoping things work out. They confuse activity with progress. But without a guiding philosophy, every decision becomes reactive. Every dip feels like danger. Every headline becomes a trigger. The calm investor lives differently. They don't chase certainty in an uncertain world, they anchor to clarity. And clarity comes from values, not predictions. In Stoic philosophy, the idea of a code wasn't abstract, it was personal. Marcus Aurelius, the Roman emperor and Stoic, wrote daily reminders to himself: stay disciplined, stay just, stay calm. He knew that power without principles leads to ruin. The same applies to investing. Without principles, profits are unstable, and losses are unbearable. The calm investor's code is simple, but it's earned. It might include rules like, I will not check my portfolio more than once a week, or, I only invest in what I understand, or, I will never make a trade out of fear or envy. These rules aren't rigid. They're reminders. They bring order to chaos. They give you something to return to when emotion floods in. A code isn't about being perfect. It's about being consistent. Imagine two investors. One reads the news, scrolls Twitter, and makes decisions based on the mood of the day. The other pulls out a page with 10 handwritten principles and asks, what does my code say? Which one do you think makes fewer mistakes over time? The calm investor doesn't just build a portfolio, they build an identity. They see themselves as stewards, not gamblers, as long-term builders, not short-term speculators, and that identity shapes their actions more than any spreadsheet ever could. Because when you know who you are, the market doesn't define you, you define your response to the market. Building your code starts with one simple question: what kind of investor do I want to be? Not rich, not famous, those are outcomes, not identities. Instead, think disciplined, patient, grounded, principled. Then ask, what decisions would that kind of investor make? Especially when it's hard. Write them down. Keep them visible. Read them when it counts. The beauty of a personal code is that it evolves with you. You don't need to get it perfect today. You just need to begin. And over time, that set of principles becomes your compass in confusion, your anchor in storms, your calm in chaos. Markets will always change, so will strategies. But your code? That's yours. It's your edge when everything else is noise. People may not understand it. That's okay. The calm investor doesn't need applause. They just need alignment. Because when your behavior matches your values, there's nothing to regret, even in a loss. So write your code, live by it, and let it guide you toward not just better investing, but a better relationship with your money and yourself. Most investors react emotionally because they lack a personal code. A clear investing philosophy reduces regret and enhances discipline. Your identity as an investor should shape your decisions, not the market. What principles do you want to guide your investing, not just in good times but when things get hard? Write 3 core rules for your calm investor code. Keep them where you'll see them before making any investment decision. Chapter 3. Control the controllables. 2 investors stood side by side, watching the same market. One checked CNBC every hour, trying to guess the Fed's next move. The other reviewed her investment plan, adjusted her budget, and went for a walk. One was exhausted. The other was calm. Same storm. Different focus. The truth is, most investors spend their energy trying to control the uncontrollable. They obsess over market timing, fret about macroeconomic forecasts, and try to outguess other people's emotions. It feels productive. It feels responsible. But it's an illusion, like trying to control the tide with a coffee mug. Epictetus said, "Some things are up to us, and some are not." This was the foundation of Stoic thought. They didn't try to predict the future, they prepared for it. They accepted that fate ruled much of life. But they also believed that within every person was something sovereign, their choices, their mindset, their actions. Investing offers the same distinction. You can't control whether the market goes up or down. You can't control interest rates, government policies, or geopolitical events, but you can control your savings rate, your asset allocation, your risk tolerance, your investment horizon, your behavior. And in the long run, those are the things that matter. When you chase control over things outside your influence, you invite anxiety. You become reactive. You start making decisions based on fear or frustration instead of principle. But when you focus only on what you can influence, your mind quiets, your confidence grows. You stop being a victim of volatility and become the master of your own process. One investor refreshes his stock app 10 times a day. He watches the red numbers and lets them dictate his mood. Another doesn't even flinch, because her rules were set in advance. She isn't ignoring the world, she's prioritizing her lane. She's practicing what the Stoics called the discipline of desire, wanting only what she can command. This isn't just about mindset. It's strategic. Imagine a ship captain obsessing over the wind. It's natural. The wind affects everything. But no matter how hard he wishes, he can't make it blow differently. What he can do is adjust the sails, chart the course, and train the crew. A calm investor does the same. They let the wind be the wind, they master the tiller. Here's the power of this approach. It works in every market condition. Bull market? Stick to your contribution plan. Bear market? Rebalance with discipline. Sideways market? Stay patient and stay invested. The market loses its power over your peace because your decisions are no longer chained to its mood. Control is a form of freedom. But only when it's real. So ask yourself, what are you trying to control that you can't, and what can you control that you've been neglecting? Flip the equation. Redirect your energy, let go of the noise, and double down on your process. The calm investor doesn't ignore reality. They just refuse to argue with it. They know the game they're playing. They accept the rules, and then they play it well, not because they can predict the outcome, but because they've mastered their part. When you do the same, you'll discover something rare in investing: peace, not from winning every trade or timing every trend, but from knowing that you've done your part with clarity, courage, and control. Most investor stress comes from trying to control the uncontrollable. Stoicism teaches you to focus only on what's within your power. Your mindset, process, and behavior are your greatest assets. Where in your investing life are you wasting energy on things you cannot control? Make a 2-column list: things I can control and things I can't. Review it before your next investing decision. Chapter 4. Silence the noise. He woke up at 6 a.m., already checking futures. The financial news was buzzing, markets teeter on brink. A scroll through social media added more fuel, influencers forecasting doom, Reddit threads filled with panic, pundits offering 15 different takes in 15 seconds. By 9:30 a.m. he hadn't even had breakfast, but his heart was racing, his mind spinning, and he'd already made 2 trades he would regret. Noise. It's the invisible tax on the modern investor, not measured in dollars, but in clarity, confidence, and peace of mind. And in a world of screens, alerts, algorithms, and opinions, it's never been louder. But the calm investor doesn't chase every sound. They tune out what doesn't serve them. Because they understand a simple truth: not all information is intelligence. Stoicism teaches the discipline of perception, choosing how you see, what you absorb, and what you let go. Marcus Aurelius wrote, "You always own the option of having no opinion." For a Roman emperor, that meant choosing not to engage in every political drama. For you, it means resisting the reflex to react to every tweet, chart, or expert hot take. The market is a machine that runs on emotion, and media feeds that machine with urgency. Every headline is a siren. Every segment is a swing. But most of it doesn't matter. By the time you've heard it, it's too late to act on. And even if you could, constant reaction would just turn you into a puppet, jerked around by someone else's string. Silencing the noise isn't ignorance. It's wisdom. There's a difference between staying informed and staying inflamed, between being aware and being addicted. Calm investing requires you to build filters, to decide what earns your attention. Because attention is energy, and your energy determines your actions. Think of your mental bandwidth like a budget. If you spend it all on clutter, scrolling, stressing, speculating, you'll have nothing left for clarity or courage. But if you spend it on your process, your values, and your long-term plan, you'll move with conviction, not confusion. The calm investor sets intentional boundaries. They may check the markets once a day, or once a week. They follow a few trusted sources, not to find out what to do next, but to stay grounded in what matters. They recognize that more information rarely equals better decisions. Sometimes, it just creates more doubt. There's a story about Warren Buffett and his pilot. When asked about goals, Buffett told him to write down the top 25 things he wanted to accomplish. Then he said, "Now circle the top 5. Everything else, avoid it at all costs. That's your distraction list." The same is true in investing. Know what matters. Cut the rest. Silencing the noise is an act of self-respect. It protects your mental space. It builds emotional discipline. And most importantly, it allows your strategy to breathe, to unfold without interruption, without panic, without meddling. You don't need to know everything. You just need to know what you believe, and follow it with quiet conviction. That's how you stop reacting and start investing. The market will keep shouting. Let it. You've got better things to listen to, like your principles, your plan, and your peace. Most financial media is noise, urgent but not useful. Stoic investors control their information diet to protect clarity. Less input often leads to better output and fewer mistakes. What sources of information are causing you more stress than insight? Unsubscribe or mute one financial news source or social media account that adds noise instead of value. Chapter 5. Emotional Diversification. His portfolio was perfect on paper. He had diversified across sectors, regions, asset classes. He used low-fee index funds, rebalanced quarterly, followed every best practice. But when the market dipped, he panicked. When it soared, he got greedy. His allocation was logical. His emotions were not. And over time, they quietly unraveled everything he had built. This is the silent risk most investors never manage: emotional concentration. We hear about diversification constantly. Don't put all your eggs in one basket. Spread your capital to reduce risk. That advice is sound. But no one tells you to diversify your emotional exposure, to spread the weight of your reactions. To build resilience, not just into your portfolio, but into your personality. Because if your money is diversified but your mindset isn't, the structure will still collapse. Just slower. Stoicism offers a toolkit for this hidden side of investing. The Stoics knew that emotions, unmanaged, were tyrants. Marcus Aurelius reminded himself daily that pain, fear, and desire were judgments, not facts. Seneca taught that a wise person prepares their soul for loss before it happens. These weren't cold men. They were calm men. And there's a difference. To be calm doesn't mean to feel nothing, it means to feel wisely. Emotional diversification begins with awareness. Know your patterns. What triggers your fear? What tempts your greed? What makes you act before you think? Every investor has a psychological profile, whether they admit it or not. Some are thrill seekers. Others are avoiders. Some chase. Some freeze. None of this is wrong, but all of it needs to be managed. The calm investor doesn't fight emotion with force. They acknowledge it, name it, and ask whether it deserves a seat at the table. Often, it doesn't. Let's say the market drops 10%. That's a fact. But panic? That's optional. And panic rarely leads to better outcomes. Diversifying your emotions means not letting a single event define your whole experience. You balance short-term anxiety with long-term purpose. You balance fear with preparation. You balance hope with discipline. How? Start by creating emotional buffers. Instead of reacting immediately, insert a pause. Take a walk. Write down what you're feeling before acting. Build rituals that remind you of your principles. Keep a journal of past mistakes and past overreactions. Learn your emotional cycles and track your behavior, not just your returns. You can also diversify through people. Surround yourself with voices of reason, not reaction. Find mentors or communities that reinforce your values. Input shapes outlook. And your emotional environment is often more powerful than your financial one. And finally, anchor to process. A written plan doesn't just guide your money, it protects your mood. When you've defined your rules in calm times, you have something to hold on to in chaotic ones. Your plan becomes your emotional firewall. The calm investor doesn't seek to eliminate feeling. They aim to avoid being ruled by it. And when that happens, when you've diversified not just your assets but your responses, you'll notice something shift. Volatility won't feel like a crisis. Downturns won't feel like judgment. Success won't inflate your ego. Failure won't crush your spirit. You'll become resilient, stable, quietly powerful. Not because you have no emotion, but because you have mastered its place. Emotional concentration is a hidden risk in even well-diversified portfolios. Stoic awareness helps you observe emotions without obeying them. Emotional buffers and behavioral rituals build resilience and long-term success. What emotion most often derails your investment decisions, and how does it show up? Start a simple investing journal. After every decision, log what you felt, why you acted, and whether it aligned with your plan. Chapter 6. Do less, win more. The young investor checked his portfolio like a nervous tick, 10 times a day, maybe more. Every dip triggered a trade, every rally sparked FOMO. He called it staying informed. He told himself he was being proactive. But his returns told a different story, and worse, his peace of mind was vanishing. The calm investor down the road made just 4 decisions all year. Bought once. Rebalanced once. Sat still the rest of the time. His results? Better. Not just financially, but emotionally. Less stress. More sleep. Fewer regrets. In a world obsessed with motion, restraint is a superpower. The market is full of incentives to act. News, alerts, apps, opinions, all designed to provoke you into doing something now. Buy this. Sell that. Pivot here. Hedge there. But Stoicism teaches the opposite. It teaches stillness. It teaches patience. It teaches that not every impulse deserves your energy. Seneca wrote, "We suffer more in imagination than in reality. Investors suffer more from overreaction than from market decline. Action bias feels productive, but often it's just a way to escape discomfort." And in investing, escaping discomfort too quickly usually means escaping long-term gains too. The calm investor doesn't confuse movement with progress. They understand that results don't come from how often you act, but how well you act when it matters. This doesn't mean doing nothing blindly. It means doing the right thing, then letting time work. It means separating boredom from urgency. It means building a system that runs without your constant tinkering. Think of a farmer. He doesn't dig up his seeds every week to check their growth. He plants, waters, waits. The market works the same way. Compounding is nature's reward for patience, but only if you leave it alone. Doing less doesn't mean being uninvolved, it means being intentional. You set your strategy, you automate contributions. You write rules for rebalancing. You define your risk tolerance before the panic, not during it. Then you let the plan work without your ego getting in the way. Most investors underperform their own investments. Not because the investments are flawed, but because the investors can't stop meddling. They chase performance. They time tops and bottoms. They let emotion override logic. And every move takes a bite out of their results. The calm investor steps back. They remind themselves more trades don't mean more control, more data doesn't mean more insight, more decisions don't mean better outcomes. Doing less is a form of trust, trust in your process. Trust in time, trust that you don't need to outsmart everyone, you just need to outlast most. This isn't easy. Stillness feels risky, passivity feels irresponsible. But it's not passivity, it's discipline, and discipline is what separates the frantic from the free. So try it. Step back. Delete the trading app from your phone. Set a schedule for portfolio reviews, once a month, maybe even less. Replace your impulse to act with the habit of reflection. Ask not, what should I do today, but have I followed my process? The calm investor knows, real power isn't in reacting fast. It's in choosing wisely, and sometimes, the wisest choice is no action at all. Action bias leads many investors to sabotage their own returns. Stoic restraint turns stillness into a strategic advantage. Trusting your plan over your impulses is a powerful investment discipline. Where are you over managing your investments out of anxiety rather than strategy? Set a recurring date, once a month or quarter, to review your portfolio. Avoid making any changes outside that schedule. Chapter 7. Prepare for the punch. He thought he was ready. His plan was solid, his allocations balanced. But when the market dropped 20% in a month, he froze. Then he panicked. Then he sold. All the preparation vanished in a wave of fear. The punch landed, and he hadn't braced for it. Mike Tyson once said, "Everyone has a plan until they get punched in the mouth." Investing is no different. Most people have a plan, few have prepared for pain. The Stoics knew that life was suffering punctuated by brief calm, not the other way around. They trained their minds not just for ease, but for adversity. They practiced a concept called premeditatio malorum, the premeditation of evils. It meant mentally rehearsing loss, hardship, and difficulty before it arrived, so they wouldn't be caught off guard. They believed that surprise was the enemy of peace. The calm investor trains the same way. They don't assume the market will rise forever. They don't count on uninterrupted compounding. They build their strategy on the certainty that pain will come, not maybe will. Corrections, crashes, bear markets, they're not exceptions. They're features of the system. And once you stop being surprised by them, you can stop being dominated by them. Preparing for the punch doesn't mean becoming pessimistic. It means becoming emotionally armored. Most investors build spreadsheets. The calm investor builds stamina. They ask themselves, what will I do when the market drops 30%? When my portfolio loses half its value? When the headlines scream collapse? And then they rehearse their response. Not just logistically, but mentally, physically, and emotionally. They visualize the discomfort. They feel the knot in the stomach. Then they remind themselves, I've chosen this path. I've accepted this volatility. I've already decided who I will be in that moment. This kind of preparation builds a rare kind of confidence, not bravado, not blind optimism, but resilience. It's the quiet strength of someone who has already faced the moment in their mind. So when it comes in reality, they're not frozen, they're ready. Mendi. The calm investor also prepares financially. They build margin into their plan, an emergency fund. A conservative allocation, a plan for cash flow in down markets. These aren't panic buttons, they're safety valves, release mechanisms to avoid making high-stakes decisions under stress. They also create scripts. In times of crisis, thinking clearly is hard. So they write reminders in advance, notes to their future self, you've been here before, stay the course, trust your plan. They don't wait to create clarity in the storm, they carry it with them. Preparation doesn't eliminate pain, but it transforms how you carry it. It's not the punch that breaks most investors. It's the shock. The disbelief. The internal narrative that says this shouldn't be happening. But the calm investor nods instead. Of course it's happening. This is part of the game. I'm not here because it's easy. I'm here because I'm prepared. You can't control when the punch lands, but you can decide how you'll meet it. You can rehearse your response. You can build mental, emotional, and strategic muscle. And when the moment comes, you won't flinch. You'll stand your ground, not because you enjoy the pain, but because you trained for it. That's the Stoic edge. That's calm investing. Pain is inevitable in investing, surprise is optional. Stoic preparation builds emotional resilience before the crisis. Rehearsing your response reduces panic and improves long-term decision-making. If the market dropped 40% tomorrow, how would you respond, and how would you feel? Write a market crash script to remind your future self how you plan to act when the next major downturn hits. Chapter 8. Define enough. He had everything he once dreamed of: a growing portfolio, a second home, financial security. But it wasn't enough. The number kept moving. Every milestone just made room for the next, and even as his net worth grew, so did his restlessness. He wasn't chasing wealth anymore, he was chasing a finish line that didn't exist. Most investors don't fail because they never reach their goal, they fail because they never define it. The calm investor thinks differently. They start with a question most avoid: what is enough? Not as a vague idea, but as a specific, personal number, a lifestyle, a limit. A line in the sand that protects them from endless striving. The modern world worships growth. Bigger portfolios, more passive income, higher yields, but Stoicism pushes back. It doesn't oppose wealth, but it demands intention. Seneca wrote, "It is not the man who has too little, but the man who craves more, that is poor." In other words, wealth without contentment is just a prettier form of poverty. Defining enough isn't about settling. It's about choosing freedom. When you know your number, what you need to live well, sleep well, and serve well, you stop chasing for chasing's sake. You stop comparing your path to others. You stop reacting to every new opportunity as if it were life or death. You gain clarity. You regain control. This isn't theoretical, it's practical. Enough can be calculated. Based on your lifestyle, values, goals, and time horizon. It might mean $500,000 invested. It might mean $5 million. The number isn't the point. The point is knowing it and refusing to let moving goalposts drive your life. Without that line, ambition becomes a treadmill. You run faster, but never arrive. And markets will always tempt you to keep going. One more trade, one more deal, one more push. But if you never say this is enough, someone else will always tell you it isn't. The calm investor reclaims that voice. They decide what enough looks like, and they protect it. They also understand that enough isn't just financial, it's emotional, it's energetic, it's about peace. Do you have enough margin in your life to enjoy what you've built? Or are you consumed by managing it all? Do you rest well? Think clearly? Live simply? These questions matter just as much as your balance sheet. There's a moment in every investor's journey where they must choose between more and meaning, between accumulation and alignment. The calm investor chooses meaning, not because they lack drive, but because they know where that drive should stop. And ironically, that's often where real wealth begins, because once you define enough, you can invest from a place of security, not scarcity. You can walk away from hype. You can pass on deals that don't align with your purpose. You can take risks that matter and ignore those that don't. You make decisions as a steward, not a slave. So take time to define it. What's your enough? Not just in dollars, but in life. Write it down, revisit it. Let it anchor you. Let it quiet the noise. The calm investor knows the goal isn't just to grow wealth, it's to know when you've grown enough, and to have the courage to stop reaching and start living. Without a clear definition of enough, you'll chase endlessly without peace. Stoicism teaches that contentment is more powerful than accumulation. Knowing your number creates freedom, clarity, and purpose in investing. What would enough look like for you, not just financially, but emotionally and mentally? Write your personal enough number, and one sentence describing the lifestyle it would allow. Keep it somewhere visible. Chapter 9. Delay the dopamine. The notification popped up, green arrow, up 12%. His heart jumped. A rush of excitement. He tapped to see more. Another stock had surged. Gains felt good. He told himself he was just checking in, staying informed, but soon he was hunting again, scrolling for the next hit, the next spike, the next high. It wasn't investing anymore. It was stimulation. Most investors don't realize they're addicted, not to money itself but to the feeling it gives them. The rush of a winning trade. The thrill of beating the market. the hit of dopamine when something goes their way. But what dopamine delivers in pleasure, it often steals in discipline. The calm investor builds immunity to that cycle. Stoicism teaches mastery of desire, not its destruction, but its governance. The Stoics weren't ascetics who rejected all pleasure, they simply refused to be ruled by it. They saw how craving made people impulsive, restless, and easy to manipulate, so they trained themselves to delay gratification, to value long-term peace over short-term pleasure. In investing, this mindset is everything. The market rewards patience, but it flatters urgency. Everything is designed to get you to act now. Flashing tickers, social hype, limited time offers. But behind all of it is one thing, dopamine, that little chemical surge telling you do it now. And once you're hooked, it's hard to think clearly. The calm investor builds a buffer between impulse and action. They recognize the emotional pull of quick wins, and they resist it, not by force, but by design. They create systems that slow them down. A waiting period before trades. A checklist before decisions. A schedule for checking investments. These boundaries aren't restrictive. They're liberating. Delaying dopamine doesn't mean you never enjoy success. It means you savor it when it matters. You let the long game be the source of satisfaction. You let compound growth, not lucky timing, create your reward, and because you're not constantly chasing the next thrill, you make fewer mistakes, you stay calmer. You move with purpose, not craving. This is why so many investors underperform their own strategies. The math is sound. The plan is solid, but they interrupt it for emotional reasons, most of them driven by the hunger for stimulation. That hunger isn't bad. It's just undisciplined. And left unchecked, it will sabotage everything you've built. The calm investor doesn't numb their desire, they redirect it. They find meaning in progress, not just payoff. They track discipline, not just dollars. They celebrate consistency, not just wins. And over time, this rewires their brain to seek peace over pace, clarity over chaos. There's a phrase in Stoicism, ataraxia, a lucid state of calm. Not a dull, emotionless existence, but a deep sense of inner steadiness. That's what delayed dopamine gives you. Not boredom, but balance. Not denial, but direction. You don't need to eliminate pleasure. You just need to make sure it serves your values, not the other way around. So the next time you feel that itch, the urge to check, to click, to trade, pause. Ask yourself, is this action aligned with my plan, or am I chasing a feeling? The difference is everything. The calm investor doesn't rush to feel good. They invest to feel free. Dopamine-driven decisions often sabotage long-term investment success. Stoicism teaches the power of delayed gratification and emotional discipline. Systems that slow you down help protect your process and peace of mind. When do you notice yourself making decisions to feel good instead of doing what's right for your plan? Establish a 24-hour pause rule. Any non-routine investment decision must wait a full day before execution. Chapter 10. Character over outcome. He held the line. The market dipped, and he didn't flinch. He followed his plan, even as others mocked him for missing the latest trend. He stayed patient, even as headlines promised easy money elsewhere. And when the market finally turned in his favor, no one applauded. But he didn't need applause. He had something better, integrity. Most investors measure success by outcome. Did the investment go up? Did I beat the market? Did I win? That mindset seems natural. After all, investing is about results. But the calm investor knows that outcome is only half the story, character is the other half. And without it, outcomes are empty. Stoicism is built on virtue. Marcus Aurelius wrote, "Just that you do the right thing. The rest doesn't matter." He was emperor of Rome, with power to shape history, yet he reminded himself daily that the only true measure of success was how closely he lived to his principles. Investing, too, invites us to ask, am I acting with wisdom, discipline, and courage, or just chasing results? The truth is, you can do everything right and still lose money, temporarily. You can make a sound decision, built on logic and patience, and still face short-term disappointment. But if you let those outcomes define you, you become reactive. You start tweaking your values to chase returns, and that's when you lose something far more important than money, your identity. The calm investor places character above outcome because they know that outcomes are fickle. The market rewards bad behavior all the time. A reckless trade can double. A random guess can pay off. But long-term success, real, sustainable, soul-level success, only comes from alignment. Alignment between values and action, between what you believe and what you do. You can't control what the market gives you, but you can control what kind of investor you become. Character isn't static. It's forged in moments of temptation, in seasons of loss, or in decisions no one else sees, when you stick to your rules after a painful quarter, when you refuse to chase hype after a bad year, when you walk away from a deal that violates your ethics. Those are the moments that shape you. And ironically, those are the moments that lead to the outcomes most investors want. Because character creates consistency. And consistency, applied over years, is what compounds both wealth and wisdom. When your identity is rooted in principle, you're less likely to self-sabotage. You don't panic when others do. You don't jump ship because of noise. You're anchored, not tossed around by results. There's a calm that comes from knowing you did the right thing, regardless of the immediate outcome. That calm is rare in investing, where most people live in fear of being wrong. But the calm investor isn't trying to be perfect, they're trying to be aligned. And that alignment creates freedom. So ask yourself, who are you becoming through your investing decisions? What values are you reinforcing with every trade, every strategy, every pause? You won't always win. That's the nature of the game, but you can always walk away knowing you stayed true to your compass. And over time, that compass won't just guide you through markets, it will guide you through life. The calm investor plays the long game, not just for profit, but for peace. And that peace begins by putting character over outcome, every time. Outcomes are temporary, but the character you build is lasting. Stoicism teaches that virtue, not results, is the true mark of success. Aligning your behavior with your values builds clarity, consistency, and calm. Which investing decision are you most proud of, not for the result, but for how you handled it? Write down your 3 core investing values. Keep them visible and review them before every major financial decision. Chapter 11. From Profits to Peace. He had reached his number. The portfolio was there. The strategy had worked. By most measures, he had won the game. But something felt unfinished. The tension didn't vanish, the peace he expected didn't come. That's when he realized he had mastered the mechanics of money, but not the meaning behind it. The calm investor understands that profit is only part of the journey. The true destination is peace. Most people enter the world of investing for freedom. But somewhere along the way, they trade that freedom for fixation. They become obsessed with performance, addicted to news, ruled by metrics. They think once they hit their goal, peace will follow. But peace doesn't come from numbers, it comes from alignment. Stoicism was never about accumulating for its own sake. It was about living in accordance with nature, with reason, virtue, and clarity. Wealth wasn't seen as evil, but it was never the end. It was a tool, a resource, a servant, not a master. The Stoics believed that you could have everything and still be enslaved if your mind was not free. The calm investor carries this into every financial decision. They don't invest just to build a portfolio, they invest to build a life of steadiness, a life of integrity, a life where money supports meaning, not the other way around. You've spent this journey learning how to react less, plan more, simplify decisions, and stay in the game. But now comes the deeper question: what will all of it give you beyond the numbers? What kind of person are you becoming as a result of how you invest? Peace is not the absence of risk, it's the presence of clarity. It's knowing what matters most and letting that guide your behavior. It's having a system so you don't have to obsess. It's being able to enjoy a sunset without checking your portfolio. It's sleeping well because your life is built on principle, not prediction. The calm investor doesn't need perfect outcomes to feel calm. Their calm comes from preparation, from knowing they did the work, from trusting the process they built. They don't deny uncertainty, they just refuse to be defined by it. And when wealth does come, they don't let it distort them. They don't suddenly believe they're smarter than they are. They don't raise the bar endlessly, chasing more for more's sake. Instead, they look around at the life they've created, the time they've earned, the freedom they've built, and they choose to live it. This is the final transformation, from striving to stewardship. You began this journey standing on the edge of a stormy sea, markets roaring, emotions swirling, uncertainty everywhere. But now you're anchored. Now you know that the storm was never the problem, it was always your reaction to it. And now you have a framework, a philosophy, a path forward. You've learned that calm is not a personality trait, it's a skill, one rooted in timeless wisdom, practiced daily, lived intentionally. A calm investor isn't passive. They're powerful in a different way, steady, grounded, clear. And because of that, they don't just build wealth, they build a life they don't need to escape from. So if you take one thing from all of this, let it be this: profits matter. But peace matters more, and the calm investor chooses both, not by chance, but by design. True success isn't just financial, it's emotional and philosophical. Peace comes from clarity, alignment, and principled living. The calm investor uses wealth as a tool, not an identity. How can you use your investing success to create more peace, purpose, and presence in your life? Define one way you will use your money to enhance your life, not just your lifestyle. Schedule it, live it, take care and be well.